traders. Okay, so it has been another eventful week in financial markets, but the big news is this week is that the market has had a break from trading tariffs, and the market has been trading a new theme, a new narrative at the moment, and that has been the US debt, and that US debt is now unsustainable. So look, it kicked off last Friday, obviously when Moody's brought attention to this, when they downgraded US debt, and US lost its AAA credit rating with Moody's. Now, also this week, what's got a lot of attention to this issue is the fact that Trump and his policies, with his tax policies that he's pushing through on the tax cuts, is potentially going to add anywhere between $3 to $5 trillion to US debt over the course of the next 10 years. So this government, the Trump administration, just like every administration before it, is not being fiscally responsible and continues to add to US debt, which is at record levels, and interest payments now on that debt is in the hundreds and hundreds of billions of dollars, and the maths on it now does not look pretty. So look, that is what the market at the moment is focused on, is worried about, and that's what is moving markets. Now look, the main beneficiary from this debt problem is safe haven assets. So if we have a look at some of those safe haven assets, the first and obvious one is gold. Gold obviously loves this sort of scenario. So we've seen gold this week open up around that 3,200 area, and gold almost went up $150 so far this week, and so we're trading at the moment around 3,300, but did go up around that 3,340 area. Look, I'd imagine that gold is, and technically again now gold is looking is quite bullish. The fact that we've based off 3,200, which was a very big technical support for gold. So yes, gold looking technically good again as well. I would imagine at some stage, the market probably will look to retest those 3,400 highs, and then potentially we'll further out look at 3,500 again, those record highs. But certainly yes, gold is been one of the safe haven assets, and a way to diversify away from the US, and is bid on the back of, and if we get more focus on this debt problem, it'll continue to do well. Look, the other safe haven asset is digital gold. It's Bitcoin. It's another way to diversify away from the US and US assets, and it's doing exceptionally well. So Bitcoin has, in the last couple of days, it has made new record highs above 110,000. So look, that's got all the Bitcoin bulls excited again, all saying "I told you so." Now the immediate short-term targets for Bitcoin, I'd imagine, we're looking at 115,000, and then further out, probably up towards maybe even 120,000 for Bitcoin. Realistic short-term targets. Further out, the Bitcoin bulls, though, I mean, they're excited, talking about 200,000 targets for the end of the year, etc. So let's see how that pans out. But yes, it has been a beneficiary of what has been happening with the market trading, and focused on the US debt problem. Now moving along, the US dollar. The US dollar does not like what is happening with US debt, so the market has been selling the US dollar on the back of this. It is a negative for the US dollar. So the dollar index DXY has broke back below 100. Look, we have had a lot of choppy trading. Hasn't been the easiest trade in the currency market in the last couple of weeks. We haven't really seen any sort of directional breakout either direction, bullish or bearish for the US dollar. But certainly, if we start trading below and closing below on a regular basis below 100, which is a technical level, psychological level, it's going to open up the lows for the year, which is at 98. If we break 98, the dollar index, no doubt we will see a lot lower. So bias at the moment is certainly short US dollars. Now moving along, the bond market. Now this is something that is definitely a key focus. What generally happens when you get governments that are, fiscally irresponsible and debt starts to become unmanageable is investors then require a higher risk premium, a higher yield to buy bonds. And so what we're seeing is that investors selling US bonds and wanting a higher yield. So US 30-year bonds are above have been trading above that critical and psychological 5% level. US 10-year yields, have spiked up, to multi-month highs around, 5.6 elevated levels. The high for the year's been, 5.8. I'd imagine if, US 10-year yields did trade back up towards, 4.8. And made a run for 5%, that would create a lot of shock waves in all global markets. So certainly you need to be keeping an eye on these bond yields. The higher these yields go, the more negative it is for not only US markets but global markets. So yes, big focus there on what's happening with this spike in US bond yields. And there is a school of thought that what may have to happen is that maybe the administration, the powers that be, actually allow stocks to crash to save the bond market, to get those bond yields lower, because that is how important it is for the US economy and global economies not to have these bond yields spike to levels above where they are currently, because they are critical levels where we could see them start to break things. Now, equity markets, lastly, they have had a terrific run in the last month. S&P and NASDAQ, obviously, we're only a few percent off record highs. We haven't had any real big moves in equity markets so far this week. Having said that, they have stopped going up. They, are, trading a little bit off those highs that we've seen recently. I must admit, a little bit surprised that they are hanging in as well as they are, with obviously the market concerned and has been trading this US debt problem. So whether or not that big move is still yet to come, I'd imagine, yes, bond yield spike, no doubt, 100% US equities will get nailed. So we're going to see how that plays out. There's not really too much on economic data or any sort of risk events to end the week. So I'd imagine that the market is going to continue trading. This new, it's not exactly a new theme. It has been something that's been simmering, underneath the surface for quite some time, but now it has, become a headline and something that the US debt problem that it's a narrative that we're trading. So I'd imagine we're going to continue trading that for the end of the week. Good luck with your trades, and we'll catch back in with you next week.